What's up, guys? Welcome to the April 2024 real estate market update for Denver and the suburbs. This month has jam-packed full of information, a couple trends and things that are going on, and I debunk some of the confusion that's going on in the market. So if you're interested in that, interested in buying or selling a home in the Denver area, stay tuned. We're going to dive in. What's up, guys? Jeremy Kane with eXp Realty and living in the Denver suburbs. Thank you so much for tuning in. As you know, we focus heavily on the real estate market and everything that's going on here on this channel. So if you like what you hear, or you want to keep your finger on the pulse of the market and all the cool places to live in and around the Denver area, please subscribe and I'd be happy to keep you in the loop. If you are ready to make that next step and you're looking to buy or sell, there is a link to book a consultation with me. I'd be happy to start that conversation and see if we're a good fit to work together. Okay, so let's kind of break this down as we get into 2024, already 3 months down. We are entering quarter two, and the truth is that transactions continue to still be very unique, and there's a lot of weird stuff happening, and it has a lot to do with the emotions of the buyer, the seller. There's all this stuff about commission lawsuits that are out there. We're not going to talk any more about that right now. There's plenty of videos on this channel and out there about all of that. Let's talk about the actual transactions. Homes that are priced correctly are sometimes flying off the shelves. We do have an increase in concerns about affordability, not just because our prices are up a little bit, which we'll touch on in a second, but those big HOA payments and those big property insurance hikes are coming, as well as the taxes are now, in play. So a lot of this is causing the market to feel a little more expensive. And so a lot of the homes that are, really well received and staged and ready to go are flying off the shelves, but some are staying on for 2, 3, 4 weeks with a lot less showings. And this isn't a bad thing. This isn't a terrible, sign for the market. It's just more normal. As I coach a lot of agents, and I'm constantly talking to these guys about how this is okay for home to be on the market. We don't need to slash the price because, before the last few years, if you were on the market for 5 or 6 days or plus, you were overpriced and there was something wrong with the listing. Just not the case now. So I'm encouraging them, as I encourage you as either a buyer or a seller, to, exercise patience, understand that people are looking at things a little bit differently. There's just a weird sentiment with buyers. The rates are higher. So it's going to cost more. And we're in this kind of weird flux of, some people have bought into the fact that your house payment's going to be a little more expensive. And some people are still holding on to those, $1,500 mortgage payments and such, which just isn't the case unless you have a massive amount of down payment. So that's where we have to really step back, understand the market, understand Colorado and what it looks like to be here, and then just be patient. Immerse yourself in the market, look at a couple houses, have conversations, have, your agent, hopefully me, check into what's going on the other side. Do they have offers? Do they have a lot of traffic? And we can talk about that as we go, because when we are seeing, that perfect home that's super desirable, maybe has a 3-car garage, has the right floor plan, in great condition, staged well, so on, we are seeing those homes still go off the market pretty quickly, and typically for a little bit over asking, but much more reasonable, usually in line with some comps that we can pull in for pricing. And so it's just a very, very different market. It just feels slower moving, but it's really not. And we are at pre-pandemic levels of inventory, so that is good. I will remind you that before the pandemic, we were still saying we had low inventory. So that problem is not completely solved. Don't run out and tell somebody it's a buyer's market, because it's just not. And for the sellers, as always, the pricing strategy comes into play, and there is no right answer. There is nothing that I can tell you right now that will give you 100% the best route to price a home if you're in a different market or you're watching this and don't want to use me as your realtor. But we are going to talk about this being so important. You must have the data that we talk about on this channel and someone that can understand the exact market, because Denver and the suburbs is a big area, and right now it seems like it's neighborhood to neighborhood. You really need to understand the statistics behind it. And this does not mean that you have to use an agent that sends you a, email every time they sell a house or a piece of mail. Those are just farm strategies for marketing. That's not that does not represent that they know everything that's going on in that market. We all have access to the same database. So let's look at those stats and understand what's going on. Maybe ask a few people, which I am very prideful of my network of agents, that if I look at a neighborhood, I can usually find somebody that either was on the buy or sell side of a recent transaction. And so I can reach out to them and have a conversation to understand exactly how that all went down. Why was there a seller concession? And really dive into the numbers so we can price your home appropriately, because this is something that's absolutely massive right now. Time, unless you have to get out, and time is, the most valuable thing, which it certainly should be. But if you have time, you may leave a lot of money on the table if you're rushing to lower those prices. So this pricing strategy is something I pride myself greatly on. A lot of buyers out there are still kind of talking about, we will wait until the interest rates go down to get into the market. We haven't really found that, paradox of, typically what happens is when interest rates go up, home prices come down a little bit. And when interest rates go down, home prices go up. That I absolutely believe will be true, because there's a lot of people that are waiting on the sidelines, waiting for those interest rates to drop because they think it'll help affordability. Well, unbeknownst to them, we have seen interest rates go up. In fact, at the time of this recording, in the middle of April, they're the highest they've been this year and the highest they've been in a long time, is we did just see a steep increase the week before this recording. And so the interest rates are going to be fluid. They're going to move around. What we're not seeing is that massive drop, because the Fed has still, pulled back on those rate cuts that everyone was promising, 6 rate cuts in 2024. Well, here we are in Q1, and now they're not saying that anymore. The one thing we know for certain is that there won't be 6. We'll see. So waiting on that interest rate to drop is, risky, because likely when that interest rate drops, people will rush to the market, price will go up. We've talked about that a ton on this channel in these market updates. However, interest rates are going up, and so are home prices, because of the current state of the market and, the right homes and the homes that are ready to roll, that are prepared correctly, are getting some competition. And we are seeing a little bit of a, healthy increase in appreciation in these home values due to some competition that is out there. And as we unpack this a little bit, Colorado was 51st in a homebuyer index, which highlighted the hours you have to work and able to be in the average price point. So we are having to work more hours to get into that, first time home buyer price point, and so on. So this is something that, certainly it's nice that the Colorado job market is so healthy. However, we are having to work more. We're having to find higher paying jobs in order to get into these, homes. So affordability is going to be pressured when we have higher than recent interest rates, when our taxes are going up, when our insurance is going up, because all of those affect, what we see is that monthly payment. And so that's where homeowners and home buyers have to really be aware of the economy and how's that going. But it's also not an amazing feeling to know you have to work more, you have to work a little harder in order to get into home ownership. And that's part of it, right? We're going to have to work hard. Go out there. I'm not saying we shouldn't have to work hard, but Colorado is 51st in a recent market report for that piece. And it's a little bit telling of our healthy appreciation over time, having appreciation during this high interest rate spell. So just know that the money is out there, but you may have to go get it. You may have to get out of your comfort zone. However, home ownership in the end will still be the answer to help you build wealth, as we know the net worth differences of renters versus homeowners. And so as we are, in the pre-pandemic inventory range, we continue to see, despite high interest rates, competition, average days on market, depending on the neighborhood, somewhere in the, 15 to 30 range. And that's where we have to focus on really what's going on. This is why it's still a safe investment to invest in real estate, because although inventory is returning to pre-pandemic levels, again, that was low, we still have, despite the interest rates, we still have this, competition. And I don't want you to hear me incorrectly and think that, it's a crazy, bidding war market out there. It's just not. In fact, we have a lot more opportunities, especially with strategic buyers agents out there that are helping buyers get into homes with offering less offers, seeing less homes. It's just about getting the right home, getting your expectations, making sure the affordability is within your comfortability, and go from there. So despite all of this, U.S. News and World Report came out that Denver was the hottest real estate market, emphasizing the strong demand, low foreclosures and delinquency, which this is absolutely the case. We see 1 to 2 per month maybe in our market. And so this has, in addition to our robust job market and our economy and how that's going, this has landed Denver on the top of this list. Now, subjective list for sure. However, the real estate market is alive and well and healthy in this time frame. And if you're, saying, hey, well, I was waiting and the interest rates were, in the 8s and all this stuff before, well, even those people have gotten a jump start when we even thought, maybe appreciation would be flat for a couple years, but we're approaching that 4, 5, 6% range that, is the average of Denver over the last 40 to 60 years still. So even in these tight times, we're still seeing a positive appreciation. Now, I will tell you that Denver typically appreciates pretty well out of the gate and then kind of levels off. So look for that to, hopefully end around 4%, but maybe it'll be 2 or 3% by the time we get to the end of the year. But that's I don't have a crystal ball. I think a lot of this will be affected if the interest rates do dip at all or stay consistent. The buyers will come out. That is all the buyers are looking for right now, is that the market remains consistent. And if that happens, we may see a higher than usual appreciation in Q3 and Q4 in our market. So we'll keep an eye on that as we kind of work through these, spring months, and when, we typically see a ton of action between March and, June, then Colorado summers kind of take over, and we're pretty, we're not bad, but it's just kind of levels off there. And then into the fall, we see a little bit of jump after school gets going, and then we kind of, fall off for the holidays as is to be expected. So we will keep an eye on that. But for now, that 4% interest rate or 4% appreciation in, and Denver being noted in this magazine as the hottest real estate market, despite all of these conditions and our high, median sales price. So as always, we must stay diligent. We must stay creative. There are options. If there's a will, there's a way for you to find a home that matches your affordability needs and congruency with your rent. There is an option, and it might not be right now, and it might not be today, but if you are a resident in Colorado who's renting and wants to be a homeowner, we can make it happen through some sort of creative financing or making a financial plan to get you where you need to be so you don't have to pay those higher interest rates and things like that on those creative financing. Because the more creative the financing is, the more interest you're going to pay, because there's higher risks on those loans for the lenders. So if you have any questions on that, or you just want to sit down and make a plan, please book a call, reach out in the comments, and let me know what you guys are seeing. What are you seeing in your neighborhoods as far as the real estate? Are things hanging on longer? Are they not? Are you Do you have any questions about any of that? I know sometimes it's hard to find that data, especially right away on homes. Please comment below or reach out to me via text or, on one of the other socials, and we can absolutely talk about your situation, talk about what's going on. I can pull data for you and talk to you about all things real estate and answer any of your maybe more personal questions as far as your financial situation and your home that you're either looking to buy or, maybe that home down the street that you're wondering what it's sold for and how it relates to your home value. So overall, we're kind of just in this cycle. Everything seems to be, moving along, going okay in the real estate industry, going okay for our property values. It is what it is. Like I said before, the more consistent these interest rates are, the better it will be. We will certainly see some people rush to the market when those rates drop a little bit. But if they drop and then go back up, and then there's kind of a fallout because people get into the market when it's low. Then they're still watching the headlines in the news and they see them go up, then they pull out. So we have to make sure that we, as educated home buyers and sellers, are just staying the course, understanding how interest rate works, understand what the effect of an interest rate is. Also understanding that if you get under contract, as the interest rates are higher, you can always try and get a seller concession and use that towards a buy down, and you might end up with a lower interest rate than you're being quoted. So we must be diligent in all of this. We must understand what's going on, and we must make educated decisions on our financial future, as real estate is a huge part of building wealth. And I just want to make sure that everybody that I come in contact with has that opportunity. So we'll catch you next time. Please like, comment, subscribe, and we'll talk to you soon.